Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So another crazy day, right? We came in today after yesterday's pretty potent reversal. How many pretties did I say? Pretty. Well, it sounds like Larry David. Pretty good. So anyway, this morning we didn't know what to expect. I know for myself, yesterday seemed like a great day because I did come with risk down and we were able to buy stocks in the hole and trade them well, and then the good book kind of said, be long a little bit just in case that was, the big volume capitulation. We saw a lot of red dog reversals in a lot of sectors. So it made some sense. But coming in today, futures were down 30 handles. You're like, what to do? So, that my handbook, which, is my hands, tells me that, okay, this is what you do. You don't panic, right? You don't just start hitting things out. You don't get crazy. What you do is you say, okay, we're above the prior day's low, which is your only point of reference you have. Maybe buyers that missed the prior day, meaning yesterday, say, okay, this is a good spot to buy. And then you salvage some trades, and once you feel comfortable, then just trade as if you had nothing overnight. And then today wound up being, another reversal day with a higher low, with a lot of sectors that we focused on, giving you a lot easier way out than some things. I've been sticking with the indices because I feel like there's more liquidity, and you might have a little bit of leeway versus some of these stocks that could get blasted from earnings from other stocks in the same sector, or some kind of news, or some kind of pre-release, or whatever it is. So the sectors have been, for me, the way to go. And yesterday, we talked about the strength that came back in the oil field, right, in the XLE and the OAH, also with the USO. Also talked about the relative strength in the Russell. So if you took the OAH, the XLE, and the IWM, which did show the relative strength yesterday, that was much easier, than the spiders that actually wound up going green. Also, it just took a lot more work. Let's just start going through some charts here. So real quick, this is the SPX, and you did have just to reenact things again. I always reenact things because patterns repeat themselves, and I like to pretty much embed it in your head what to do potentially the next time. Here was your breakout failure. Here is when it broke below a prior high. Shouldn't have done that if there was going to be momentum. Shouldn't have broke the 8 and 21 day if momentum was going to stay, and then shouldn't have broke the 50 day if the intermediate trend was going to be intact. You had a quick bounce off the 150 day to get rejected by the 50 day, giving you some clues more weakness to come. Then you could have added to shorts. Here is that H shell setup. Here's your pull. Here's your sell into the moving averages if you're a bigger trader or a macro short type of individual. And then here was your momentum move that you could have traded through the bottom. So short the strength, add here, and then who knows where you cover. And into the volume and potential fear, this could have been a good spot. So today you come a little closer. What could you have seen? It was definitely here was the low, and then we pretty much opened a little bit above it. So the way I handled it is, when I first came in the morning, let's go to the spiders and go to the 5-minute chart. Because a lot of people like Red Dog, thanks for the transparency, thanks for guiding us through it. So what I did on the first, scenario is, we opened down and then we came into here. And I pretty much got very, very light. And I said, wow, if we opened here and broke that, it would have been a horrendous day for me. But instead, gave it some time, sold into some strength, and then said, okay, I'll see what's next. Then you had a higher low, and I think right around here, got back into the spiders, got back into, a few, actually I think the XLE also, or whatnot. And then you had another quick move, okay, into the prior high. So what usually happens at a prior high, you get a little bit of resistance, right? Filled the gap, hit the prior high, sold some. And then on my VTF, I said, you know what? I think they're going to hold us in tight today. So I'm going to be a buyer on this dip, put some bids in while I go to the gym. So I went to the gym and kind of got a little lucky because I put a bid in right around this area. I said, you know what? If it gets down to here, I'll be a buyer at 185.20 versus getting stopped out, and then put my stop in below here. I think my stop was 184.40. And then pretty much came back, and we were right into here. So I was like, all right, great maneuvering, Then sold some, and then, the rest of the day was pretty monotonous. But overall, it was, if you came in flat, you had a great day, lots of great trading. If you came in long, you had to salvage, hopefully make back half. I think I made back half my day or so in this, and then had to say, okay, now I'm going to trade. And there was a lot left to do after that. The XLE though, was a rock star. Okay, the XLE, you go to it. Okay, here was your red dog reversal. Okay, that was green, with some power, whereas some other sectors didn't. So this should have been your first look in the morning if you were flat, or if you were long, maybe add to it and then wait. I wasn't as patient as I probably should have been with that one. And then you go to the 5-minute chart, okay, and if you just waited and sold the same way into this, because that's pretty much what I think I did the first time, saying, okay, I'm out of the way, or just said I'm going to be hold it unless it goes below this. You do it any which way you want. Then if you sold it into this actually held a lot higher. There was relative strength. When the spiders came all the way back down, you saw the relative strength, and then that gave you a much better move, for today. And so there you go. First day and a half move. This does look a little bit different than you've seen from here. And if you go to your basic studies and you go to your volume, and you want to add it, okay, look at the volume that came in yesterday and then some volume to support it. OAHs, pretty similar also. Not as much power, but decent volume, decent red dog reversal. Took a little longer, but it did okay too. Okay, but again, these are just tactics that you use for day trading cash flow. If you're trying to get a swing trade, you could do that too. You've seen this a few times before. It's still well below the 21-day, the 200-day, all those things. But if you waited till here to buy it, it's not going to work. So if you are long it still versus this and say I'm going to hold a portion because I'm going to trim and trail, or I used a tier system where I had tier 1 yesterday, added tier 2, or added when it went through the prior high and sold some, now you wait. IWM also, yesterday you had a decent engulfing move, okay, which you don't see in any other charts that I just showed you, okay, which did the actually prior 3-day range. So this was something to take home, and if you took this home because you saw the volume and you saw the relative strength, gave you a little easier way out. Not only did it, open up, not get near the low, was halfway through, and then it traded through this for a trade. So now, if you want to hold a little bit, you hold a little bit, but that was your day and a half move into some crazy volatility. Now the question is, what's next? I guess it still has some room. Some people are saying this is just retesting this area, which it might be, but I'd rather see you cover, and play along, and then test out a few, shorts a little bit higher versus, some people are saying this was going to go right through 100, blah, blah, blah. And if you add it to your shorts here, you're probably covering into that versus selling some, of your longs into the tactical bounce. You know what I'm saying? There's definitely ways to maneuver. Same thing, remember when it was here, a lot of people were saying, it was going to get crushed here, and it didn't happen. It actually broke above it, gave you a nice little tradable trend before breaking to the right side and then breaking all the moving averages in here. So, you have to really have the right exits and entries in order to stay with the trade, and take the pain. If you're just someone who's got a thesis and for 9 months say, I'm going to be right at some point, you better have some deep pockets, in order to have it go against you for a little bit. Same way if you're like, I think this market has to go to 1740, it's going to 1570 and testing that double top that it took out a year or so ago. Okay, and you're just shorting this whole entire move, that's your prerogative. If you say, okay, heavy volume into a 10% correction, let me cover some here, see if we get back up and retest the 200-day, and if we get rejected at the 200-day, maybe get re-short, kind of like you could have done when we bounced off the 150-day into the 50-day. It's a little bit better and more tactical, and then this way you could play both ways. I'm going to try and start playing both ways a little bit better. So anyway, as far as stocks are concerned, this had a really nice move today. Okay, I think it was upgraded after the close. We'll see what happens. You had a little red dog reversal right here. It still hasn't gotten through there. Did show power by getting through this 3-day range and shows that it's in accumulation. They're not just letting this thing fall by the wayside. So at some point, I do think it'll get going when the market, relieves itself of some pressure. And this has got a big future, I think. I'm not going to give a fundamental thesis. I'm just saying, now this is above the 8 and 21-day, and if this could hold the top third of this for a little while, maybe there's a better trade at some point. If you remember, tried to go right before the market broke hard, got some people out, got some people probably even shorter, and now we'll see what's next. Apple really didn't do much today. It was lower. They had their big event. I think there was a lot of pluses to the new product cycle. I'm not going to get into it. That's not what I do. But it did break below the 50-day. It broke this trend, and looks still a little vulnerable. It's got earnings coming out on Monday, so we'll revisit then. You follow a very, very accelerated trend until that trend changes, and the change right there. So the speed and the composure is a little bit different for a little while now. So when that happens, you change. You remove the volume here. I actually, I also came in, looking at whether Twitter or Facebook can go green. But in the back of my head, I'm like, you know what, Netflix, got crushed, and both these are priced for perfection. And so I had Facebook overnight, and into that first move up, I said, you know what, just came back $1. Let me get out of it because I'm not so compelled to have to be in Facebook, especially I'm not going to sit through earnings. So with Facebook, actually, if I look at that, it closed a little bit better. Still has this descending channel here. Okay, it held the prior low again. If you look at the 5-minute chart, what I did is I just didn't revisit it, unfortunately, into this first move up. Okay, I sold some, and then I guess what I should have done is once I saw this wedge get built here, you could have got long. So that's the problem with taking overnights. You're just happy to salvage something, versus if you were like, okay, I'm going to just look for an opportunity here. Once it traded above this, you had a good one. Then you had to look. People are like, oh, how do you play a red dog reversal on a 5-minute chart? On a 5-minute chart, that's a red dog reversal. Just like as if this was a daily, not a 5-minute, came in from here all the way down, cleaned out some longs, got some people short, and then reversed higher, and it cleared this. So here's a little 5-minute red dog reversal versus a daily one. So you can use this intraday too, pullback. Anyway, Twitter, what did that do today? Was a little weaker. It's got a little bit of a doji. It's putting in a little bit of a lower wedge here that's still in control by this wide range bar. Some would say this is a bear flag. I'm not, saying it's not. I just think that it's going to get a little tighter, and then in some way, if I guess if we go back and test the lows and the low's not in, probably breaks that way. But if for some reason that 1820 sticks and things continue to get a little bit better, maybe it breaks above that, right? Or we'll just wait for earnings. We'll see. Netflix had a big gap down and closed well off the lows. And if you remember in the morning call, I talked about this area. I didn't play it, but some people were like, thank you so much, Red Dog. You gave me this area to play. You talked about 340 and 320, or even here. And it opened up. Then there was a lot of nice little 5-minute intraday tactics there. You had your gap down, came off it, got tight. So it made a little 5-minute wedge. So if you just said, I'm going to buy it versus low here, okay, which was about $10 risk, wound up going almost 40. So, wow. And then it traded above this too. So a nice intraday action as far as from the long side if you weren't caught in this mess. But most people weren't caught in it because we don't take stock into earnings, just options. So now you have Google out. I don't know exactly what it's doing now, but this has been beat up a little bit going into earnings, and at this point, it looks solid, but not like blockbuster. And the question is, do they want to beat it up like they beat up other stocks that came out with earnings? So here is support. I'm not sure if it's below this now. Okay, and then here is the gap. So this is support 1, support 2, and then it's in the gap. So we'll see. Again, it came from 600 down to 536. So it'll be interesting to see if some institutions come in and support this thing, so it doesn't fall apart. We shall see. And that's really it. I know, I took, I took a little spiders home again and a little baba actually, and I obviously don't want to deal with the headache like I had today, but since I did it yesterday on the reversal, I was like, you know what? I've done this before where, first day of reversal, you take it home and then they shake the tree, and then the next day you have to deal with it, and then and that day you don't want to do it again, and then that's the day the overnight trade happens the way you thought it would the prior day, but you're like, oh, I wish this was yesterday. So I figured I would take a little spiders, a little baba. I didn't really spread out. I don't have a lot of risk on. And if, and if we open up down again, I'll try and figure out the same thing. And if for some reason we open up down and we don't turn around at all, I'm just going to get out and we'll be done with overnights again, because we've had too much success, without overnights, trading the ranges and, using the red dog reversal tactic, using the H cell setup tactic. What I do suggest is if you have 2 accounts, one swing, one active, do not have the same position in both. When you're in portfolio approach, yeah, you could do it that way. But when you're in a market that you're not sure whether or not you could stay with the trade for a day and a half, you want to, like, if you had two accounts and you took the XLEs home saying, oh, I think this is a good swing long because of the red dog reversal, and then open down because of the futures, you could have said, okay, I'm going to hold it here unless it breaks the low, and then in your active account say, oh, you know what, let me take the pain on my swing account. You buy it there and you get a good day trade. So you hold this, goes green, you salvage it, make money. This, you make fresh money because you use the rule of saying go after the strongest stock that showed relative strength into an emotional down open, and typically that works out, or at least gives you a trade. And that's about it. Tomorrow, I'll actually be in the city tomorrow. I'll be on Fox Business at 3 o'clock, so I'll be working from there instead of Short Hills. So I'll probably do some kind of relaxed morning call, nothing like normal. And hopefully you enjoyed Laz's presentation and you've been doing okay. I think most in our community have had risk down since we broke the 1970 50-day. And although you reduced risk and you felt like you didn't feel a lot of pain of the last 100 or so handles, doesn't mean you could just blindly throw things against the wall or forget that there's still lots of volatility that could happen. I just want to remind everyone with the EWGs. If you look at the chart, a lot of people thought, okay, you could put a lot of money to work here. Okay, it broke the, you had this false breakout, broke the 21-day, broke below the 200-day. Let's buy here. You have to put money to work. It's Europe. It's going to bounce. And what happened? You did get a bounce, and did create another flag. But what did it not do? It didn't reclaim the 200-day, and then rolled lower and wound up getting hit real hard. I do think, to be honest, that Europe will be bouncing tomorrow. That DAX could be up 1.5% or so, and the rest of it, which will help our futures, but we'll see. I didn't buy the EWG just because, it just, whatever. You have to buy so much of it to make it worthwhile, and just avoided it. So you'll see what happens with Europe tomorrow if it finally bounces. It's been crushed. And that's really about it, guys. What's been important is knowing your time frame, knowing your risk, knowing what you can handle, knowing what makes you happy as far as your expectations. And I think those who've had those down or have been pleasantly surprised. There's been a lot of things to do coming in flat from buying in the hole and using your 5-minute charts like we talked about. There's been a lot of things to do using relative strength or relative weakness. If we had an up open, which we haven't had an up open, so I don't know when the last time we had one. That's when you short weak stocks or you short into moving averages curling down. Like if we happen to trade into the SPX 200-day, there were a lot of people who, once we hit the 150-day, you had this red dog reversal, you had a nice 3-day trade, but they're like, you know what, I'm shorting this into the 50-day. From here to here it was a little oversold, now it's not. And then they're probably saying, okay, from here to here you're a little oversold. So if we do get a move into the 200-day and clear this little pivot, why not, test a short here? So, if you're flat, no big deal. If you're bored in the hole, great. You sell into resistance. If you're going in flat, and you don't want to chase it up open, maybe you get to short into the 200-day if we can't reclaim it. Same thing that happened here, So, we'll see what happens next. Hopefully, we do get a little bit more of a push into there, at least overnight, because I did take it. But again, you know what? At this point, no one takes the same amount of risk they have, or typically don't, overnight that they have intraday. So really a better trade is if we opened up 10 handles or 8 handles or 7 handles or whatever it is tomorrow, I'd probably be selling the spider and say, oh, great overnight trade, now let me trade. If we open up down, you typically could get the size you feel more comfortable because you're in control during the day, and then you go after strong stocks that were strong today, down tomorrow, and you make more money anyway. So either which way it happens, don't stress out. It's Thursday. It's been a long week already, lots of volatility, and at least we have some interest back in the market. We have volume higher. You have a VIX spiking. You have the news all over the market talking about this big correction. So anyone who missed the big move might be saying, oh, let me think if I could put some money to work. Or if you're going on a macro approach, you know what? You're doing a monthly in the S&P, chances are this will help your average cost. And at some point, I'm not sure when, we could make new highs. It could be this year, it could be next year, it could be in 5 years. But I know my wife started her 401k in 2004 and did quite well during the financial crisis because she stayed the course. And she even said to me a month ago, should I reduce some stuff, stop contributing? I'm like, no. If we trade off, you can do the same thing. You're 37 years old. We're not going to really look at this until you're 60 plus. So I know a lot of people that sold a lot of their 401ks or this and that in the midst of the financial crisis and probably saved themselves 15%, but then never bought back. So not only did it reclaim their prices, they never caught any of the move from, I'm not even going to say 666, even from 1,000 or 1,100 up to 2,000. So got to know, what account is serving its purpose for what. And if you have a long-term account and you're 40 years or less, keep contributing. If you were looking for some way to start, maybe your kid's 3 years old and you're like, I want to start what is it, 4, my brain's dead right now. One of those accounts for your kid, 529. Maybe you say now, okay, we just came off. Let me put a little bit of, let me put X amount in now because we just came off 10% on the highs, and then go every month, and then hopefully in 10 years from now when your kid is, it's 13, okay, in 13 years, you then, you save for college, because at some point, historically, you typically make 7-8% a year if you stay the course. And if you happen to start from a good time, you probably make more. If you happen to, on every time you get a big move like this to the low side, you have some extra money and throw it in, you'll outperform. But that's all that, and see you tomorrow. Have a good night.